Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 26th of January. New Zealand's CPI accelerates and lifts the Kiwi. New Zealand's CPI accelerated sharply in the fourth quarter, confirming that the nation's economy continues to perform at a robust pace. In our view, this may have been fueled by the RBNZ's 3 rate cuts throughout 2016, as well as rapidly tightening labour market in recent quarters. Considering that the CPI is now within the RBNZ's target range and also that the nation's 2-year inflation expectations have stabilized and risen somewhat from their 2016 lows, we expect the RBNZ to keep its policy steady for the foreseeable future, absent any major shock. The Kiwi came under renewed buying interest at the release of the CPI data, while the neutral policy bias from the RBNZ may keep it supported in coming months. However, with regards to the technical picture of Kiwi in dollar, we see that the advance was stopped near the key resistance territory of 0.7310, which also happens to be the crossroad of the prior upside support line taken from the low of the 20th of January 2016 and the downside resistance line drawn from the peak of the 7th of September. The price structure on the 4-hour chart still suggests a short-term uptrend, but we would like to see a clear break above the aforementioned key resistance zone before we assume its continuation. Now in the US, the Dow Jones Industrial Average broke above the psychological figure of 20K yesterday, hitting a new all-time high. Even though there were no major fundamental news behind the move, the overall market sentiment has been risk-on in the past few days, which may have supported the break. In addition, President Trump signed an executive order yesterday to build a wall along the Mexican border, a policy that was central to his campaign. Coming on top of his latest action to clear the path for building oil pipelines in the US, we think that these steps from the president show that he tends to keep his pre-election promises, which may have also contributed to the surge in the Dow. The break above the 20K milestone signals the upside exit from the sideways range the index had been trading since the 14th of December, between that psychological number and the 19,660 support zone, and shifts the short-term bias back to the upside, we believe. Given that the bulls are now exploring unseen price territories and that there are no prior peaks or inside swing lows to mark new resistance levels, we believe that the next stop for the surge may come near the 2200 zone, which is the 161.8% extension level of the width of the aforementioned sideways range. As for today, during the European day, we are likely to get some further clarity on the timeline of the Brexit negotiations, as the UK government is expected to introduce legislation to Parliament seeking the approval of lawmakers to trigger Article 50, in accordance with the Supreme Court's decision on Tuesday. Additionally, yesterday the government agreed to set out its Brexit objectives in a formal policy document called a white paper, which is expected to be published in the near term. We don't expect a major market reaction from either event, considering that lawmakers are unlikely to vote against the triggering of Article 50, and that the white paper will probably be a formal reiteration of what the Prime Minister outlined in her Brexit speech last week. As for the UK data, we get the first estimate of the fourth quarter GDP. The forecast is for GDP growth to have slowed somewhat, which could cause the pound to reverse some of its recent gains. However, we think that even a minor slowdown would still point to another quarter of strong economic growth. As such, we believe that this will still be encouraging news for the Bank of England policymakers, who will hold their first Super Thursday for the year next week. In the US, new home sales for December and the initial jobless claims for the week ended on the 20th of January are coming out. We have only one speaker scheduled for today. UK Brexit Minister David Davis will present the legislation related to Article 50 to Parliament. For more information, please read the full comment on ironfx.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.